Hi, all. Welcome to Cryptonite. This is an episode where we're going to discuss all things crypto and also a bit of the VC landscape and also prison and jail terms that have been going on. So it's a complete cycle. So welcome back, and Dr. Tejasvi, why don't you take this away?
Hey Sham, thanks for the intro, and for all our listeners out there, we missed the episode last month. It was interesting because Sham was actually visiting Switzerland. We could have done an episode in person because we were in the same house for like 4 or 5 days. But unfortunately, Switzerland had too many other things to do instead of doing some drab podcast about crypto. So we decided to do other things. Anyway, now we are back in our usual desks, and getting back to this June cycle is exciting. So a couple of major things. One is that these guys from Tornado Cash got jail terms. That is the one guy in Amsterdam or in Netherlands got a jail term. So for those who don't know what Tornado Cash is, it's a piece of open source code that was deployed on the Ethereum blockchain by 3 developers. One of them is in Amsterdam. He's under jail term now. The second guy is in the US. He's under trial. The trial will start in September, I think. So he's in judicial custody, for the lack of a better word. The third guy is absconding. We don't know where the third guy is. All 3 were partners in this enterprise where they deployed open source code on a blockchain, and the open source code, without their control or without them having explicit control over it, was doing its own coin mixing. Now, you could argue that this is a bad thing. They shouldn't have deployed the code. You could also argue that they had a UI on top of it. So the UI was built by the team, and the UI had some ways of making mixing coins easy. So you could argue that they facilitated all the laundering that happened behind the scenes by open source code. But it's a tricky one, I think, because the code is still out there. The code can be still used by anybody who wants to use it because it's an open source code. It has its own autonomous presence in the world. Yeah, so that's kind of what's happened. I am a bit sad about this at some level, but it's a bit tricky because they did facilitate coin mixing through a front end. They had their own token in the mix, which accrued some value because of the mixing that happened. So they did have the ability to take financial gains from the laundering itself. So the case is not as clear cut, even from the libertarian/free speech point of view. Because ideally, in my ideal world, what should have happened was they wrote the code, they deployed it, and that's it. They gave away all ownership and they were done. They were just like, they got moved on to other projects. Like similar to what you could say Satoshi has done. He wrote the code, he deployed it, he's gone in some sense. Of course, he still controls a bunch of Bitcoin. So you could argue that there is a financial incentive that he has. But in the Tornado Cash case, they could have left it completely control free. And that would have been ideal. And their case, in terms of free speech or in terms of open source code writing, would have been much stronger. But it becomes a bit murky now because they had a UI on top, which was hosted by them in a server that they controlled. They had their own token, the Tor token, which was involved in this Tornado Cash mixer. And that Tor token, if it appreciates in value, they would stand to benefit from it. So there was some financial incentive. So it gets a bit more muddied, the case, in terms of free speech and all the freedom aspects that we love. So yeah, that's where it stands. We'll see how the Roman case goes. Roman is the guy in the US. His case will start sometime soon, and it'll be all over the news, at least in my little world. So that's a Tornado Cash case. That's kind of a sad thing. But in happy news, in terms of legal outcomes, Craig Wright, who we've discussed before on the podcast, he used to claim, or he still claims that he's Satoshi, without being able to prove it in any sort of way. And we all know in the community that he's a fraud because he's filed lawsuits against multiple people in courts of law, alleging that they. So if I say on the record that he's not Satoshi, then he would sue me in some sense. I mean, I'm probably a small fish, so he will not come behind me. But there are other big fish that he has sued, notably the Bitcoin podcaster Peter McCormack, the kind of anonymous Twitter influencer, Hodlonaut, and a bunch of others. And Hodlonaut actually specifically went through a lot of pain to fight the case because he was not rich. And Satoshi was, or fake Satoshi was funded by this billionaire casino mogul called Calvin Ayre. And Calvin Ayre kind of bankrolled Satoshi, fake Toshi to kind of, we call him fake Toshi in this world because kind of funny, I think, allowed Craig to run these cases. So eventually what happened was a bunch of people got together and formed this alliance called COPA, COPA, and they sued him back in England, saying that he is not Satoshi and he can't prove it, and we want to put this on record in a legal system somewhere. So the case went on for like 6 months, and it was a joke in some sense because Craig kept lying and lying and lying, and he was getting caught by multiple lawyers in front of a judge. And the judge was very clued in. He knew exactly the case in all its details, and he was. In the judgment, it was very clear that Craig has lied and he has misrepresented himself, and he has caused a lot of trouble to all these people he has sued. So he has to pay back a bunch of damages. So it kind of was a good hopefully final nail in the coffin of Craig Wright and his drama, which has been going on for like 10 years now or 8 years, and taken a lot of people sadly into dark places. Like a bunch of Bitcoin core developers decided to stop contributing. Bitcoin.org, the website, decided to take down the white paper because he was suing everybody who hosted the white paper on their websites, because he claimed copyright on the white paper and said that anybody who hosts it, they can be sued. So it was just a mess, and we are kind of happy that he finally got called out in a court of law saying that he's lying. It's kind of ironic because the court of law really shouldn't be involved here, because Bitcoin's entire purpose is to be out of the scope of the courts of law of this world. But if you sue somebody in real life and they have to kind of deal with the real world, you have to kind of take real world defenses as well. So we are happy that COPA did this. COPA is a bunch of people who got together. Very famously, Jack Dorsey, the co-founder or ex-co-founder of Twitter and Stripe, was there. Not Stripe, Square, sorry. He was there, and a bunch of others who helped fund this lawsuit. So kudos to them, and we are kind of past our legal trouble in some sense. So yeah, that's the legal update from this couple of months. We can go to some other interesting things, Sham. How do you want to play this?
So I heard that Ascoin is back.
Yeah, not just that, a bunch of others. So for those who don't know, last cycle or maybe 2 cycles ago, or in 2021 and 2022, when crypto was kind of in its peak in that cycle, NFTs were a big paradigm. A lot of people were buying these NFTs. NFTs could be like, they look like pictures of monkeys or pictures of animals or whatever it is. And people used to attribute value to them, and they kind of went very high in value. And of course, crypto skeptics were like, what is this hack? What is this? Why are you guys buying a JPEG image for, I don't know, $1 million or whatever it is? These days, that has been replaced with the idea of what is called a meme coin. A meme coin is basically a crypto coin which has no purpose. Its entire purpose is just to be around a meme. Originally, Dogecoin was this kind of meme coin, but Dogecoin is too old for these new generation crypto speculators. Then we had Shiba Inu, which was also like a Doge-based meme. It is still pretty strong. Shiba Inu is a top coin even now. But these days, there are so many meme coins, it is almost impossible to keep track of them. The meme coin universe has exploded to like, I don't know, 70 billion plus of market capitalization. Of course, this market cap is a bit shaky, as with all things crypto, because liquidity is always not as high as you would want it. So if you start actually liquidating these assets, their prices would drop quite dramatically, and you would get, like, the market cap is a bit of an illusion. But for, I would call it understanding purposes, we can use the market cap as a barometer of how big the market is. So all the meme coins are trading at around 60 billion together. Bitcoin itself is at around 1 trillion. So you can kind of imagine how big the market of meme coins is. And meme coins, of course, all of crypto is a meme. So we kind of have this meta pattern. But let's assume that Bitcoin is a bit more serious now with all of its gravitas for the last 15 years. The meme coins of the current day are much more, I would call it, trusted, in the sense that people who buy the meme coins trust the creator much more. In the sense that you would send your Ethereum or Solana tokens or whatever to like some random address, and they would allocate you some meme coin like 6 days later. It's just like a black hole. You send money there and you hope things come back. And those things that come back might or might not have value. And people are doing this with their eyes wide open. So that's how crazy it is. And we have Trump coin, Biden coin, Remilio, Retardio. It's completely nuts. I mean, I don't even know the names of half of them.
Right. So, so in effect, like, you're not expecting any economic output out of this other than the coin itself, and the branding of the coin is the output of
Yes. Yes.
Yeah.
No, but if you think about it, maybe Sham, you have a better take on this. GameStop is kind of in a similar situation now. GameStop fundamentally should not have any value at all. Their earnings and their actual brick and mortar business is probably not there even, or it's probably like a very small part of what represents their market capitalization or the mania around it. So you could, if GameStop is a thing in the traditional world, the corresponding equivalent is a meme coin in the crypto world. So it's not like crypto people are any more prone to speculation. I think humans are prone to speculation, and there are vehicles that are out there to help them cater to that speculation. And in the traditional world, you have GameStop, AMC, and a bunch of these stocks that are trading because somebody put up a meme on Reddit. And on the other side, you have crypto, which is also like 24 hours. Casino is open all the time, and you have people minting coins all the time. So yeah, speculation. Humans want speculation. People will give those tools to them.
Yeah, I mean, I get the speculative aspect of it, but I disagree that GameStop and AMC have no economic value. In fact, GameStop has capitalized on these idiots who bid up the share price by issuing more shares. So now, they actually have a fairly big war chest with which they can go and actually acquire some other company which is creating value in that space, in the gaming world, and dig themselves out of the hole they found themselves, right? Uh, so when it comes to like traditional equity markets, there is always economic value tied to securities. It is not disjoint. Sure, a bunch of people can decide that they'll bid something up beyond what is rational, but there's a clear line between what is rational and what is irrational, and you can disagree with it, and you can basically give a coherent argument as to why something should be trading at X but it is trading at 5x or 10x, and so you can actually build a rational argument to support your case. Whereas what I see with these meme coins is that neither the buyer nor the seller is expecting any rational value to be created. They just want this to be pumped, and the idea is that they would be the first ones to exit, and they openly talk about rug pulls, and I hope I can exit before the creator rug pulls, right? So
They
this is
they
a
they, wa-
common
they, wa-
thing.
they want to front run the creator.
Right. And also the creator himself is not promising any economic value. Like, what is he going to do with all this money? Nothing. It's like, I'm going to pump this coin, that's it. So I think this is, I wouldn't conflate the two. So this is some new kind of fraud, because I think what they learned from NFTs was that you still needed someone to create the NFTs, like a third party. It was not, and it needed to be hosted somewhere. So people hosted it in AWS. So it was not entirely encapsulated within this crypto fraud universe. So this meme coin is something that that since there is no promise ever made, you can't sue anybody for anything, right? There's no misrepresentation. You're going there with your eyes wide open, and if it goes to zero, well, it was expected to go to zero because there's no economic value. And it's kind of fascinating that people have pumped in $60 billion into this, which goes to show that the Fed should continue hiking.
Yeah, there is definitely a lot more liquidity in the system that wants to find crazy things to do. The other thing about meme coins itself is, if you think about it, Dogecoin, the original meme coin, so to speak, started off with absolutely no purpose than just being a joke. But then in the middle of I guess last cycle, Elon Musk decided to kind of jump in the bandwagon, stir up the shit a little bit more. He said in some obscure way that he might find some utility for Dogecoin, like he might make it like the official coin of Twitter, or have some tie-ups with Tesla, or something along those lines, whatever he can control, right, in his orbit of influence. And that possibility that this meme stands for something more than just a meme is always in the ether somewhere. No pun intended. It's in the space somewhere, right? Somebody always, like, they know that there's possibility that something will happen. Like, for example, all these Trump coins and Biden coins, which are kind of floating around right now. Uh, of course, Biden and Trump have not endorsed them, have not owned them, have not launched them. They are completely not affiliated with them in any way, shape, or form. But there is this idea that in the election, which will happen in the future, Biden will win or Trump will win, and this coin kind of has associated itself with it. This coin also will pump when the election results come through. Now, of course, there is no actual tie between the two events. There is no the coin will not benefit materially from any of these outcomes. But I guess humans want to bet on lotteries, to bet on random things, and yeah, like a lottery is a good example, right? A lottery guarantees you nothing in some sense. I mean, of course, you could argue that the Sikkim state, which issues the lottery, will take the lottery proceeds and implement some infrastructure projects in Sikkim or Arunachal Pradesh or wherever it is. So the same GameStop ideal, right? GameStop issues a bunch of gambling tokens. And with that money, they can actually do something valuable. So in this case, the meme coin creators technically could do something interesting, valuable with it. But from what I know, they either will try to market the token more or they run away with it. So crypto has been much more open about being a scam. So we hope that Sikkim government is doing the right thing with the lottery proceeds. And we hope that GameStop will do whatever you said they will do and not run away with the money. So yeah, that's meme coins. It's not going to go away. It'll come back in one form or the other. It used to be NFTs. Now it's meme coins. That's the nature of the beast. I'm not particularly happy about it, but I would not be the person to say you don't know what you're doing, so you should be told what to do.
Right, right. I mean, at the end of the day, who knows? They might float an ETF of all these coins,
No,
and pension funds will buy.
in the investor community that I'm a part of, there definitely are specific managers who are professionals who are thinking about making up like a fund which will only invest in meme coins. It's not an unheard of idea, right? It's a possibility because there are people who are able to spot memes which will trend before others do. They know what real world events are memeable or are kind of have this culture of which forums do you have to like pump them in. Do you have to go to some Discord or some 4chan or 8chan or Reddit or somewhere or Twitter or wherever it is that the meme world evolves, right? So there are professionals who can do this really well. So there is a possibility to make a quick buck if you are a professional investor as well, but definitely beyond my ability to do this. So I am personally not in this game at all, but I know people who are definitely serious about this.
Interesting, interesting. So, speaking of ETFs, do you think an ETF makes sense? Like, have they solved the staking problem?
That's actually an open question. So just to put it out there, there's already existing ETFs which have Ether as the only asset. What is interesting is in Europe specifically, you cannot have an ETF which has one asset. It's not allowed by regulation. So you need to have, I think, a basket of 5 or more assets to make up an ETF. Otherwise, it becomes an ETP or a ETN or something kind of which is a bit more of an exotic asset. So European markets have been very slow on this. US, of course, has still been very slow on all of crypto. But Canada, Hong Kong, a bunch of other regulatory jurisdictions have launched ETH-based ETFs. ETH futures ETFs already been around for a long time. So it's not like a new idea. The question is, what will they do with the staking part of it, right? That's kind of an open question. For people who don't know, unlike Bitcoin, with Ethereum, what happens is, if you hold a bunch of Ether, you could put it to work. Not unofficially using loans or whatever, but officially in the protocol itself. The protocol itself allows you to stake ETH and actually get yield from the ETH. So the question would be, if you have a bunch of ETH that you hold as a part of ETF custody, what are you going to do with it? Are you going to just keep it? Are you going to stake it? If you're going to not stake it, you are missing out on the native yield that this ETH is eligible to. What is that guarantee that people will actually buy your ETF? Because the people who buy the ETF are missing on the yield. They could buy, for example, the equivalent from a different provider who's not an ETF, but they will at least give you back the yield by doing the staking operations. So this question is still open. The SEC has specifically said that the only ETF they're going to look at are the ones where the staking is not done, because they want it to be a commodity, so to speak. So a commodity ideally should not have yield on it, because there's no way to kind of grow the commodity by itself. That's the current stance of the SEC, but we don't know how it will play out, because the ETF issuers will be aware of the fact that their ETF is handicapped by the fact that there is more yield available in a competing product. So we'll see how it goes. For now, we know that the ETF will come soon in the next, I don't know, 2-3 months. They have approved the first step of the process. The S1 has been accepted or something, and the rest of the process will happen. Interestingly enough, for those who are aware of this or maybe not aware of this, Grayscale used to be this company that had these products, which are like closed products, which represented ETH, Bitcoin, and a bunch of other tokens. And the Grayscale Bitcoin Trust became the kind of the main ETF for Bitcoin. And what's surprising or not surprising is that they have bled a lot of money. The Grayscale ETF has lost a lot of money through outflows, but that's a separate issue. The thing is, Grayscale, the product, the closed-end product, used to be like a harbinger of things to come, in the sense that if they had a product which is a closed-end product, then that could become an ETF eventually. That was the promise. And in the last couple of months, they have launched closed-end products for a bunch of other tokens. So most notably Solana and Near and a couple of others. So there is a speculation that in the future, 2026, 2025, whenever, it's possible that these products also will become ETFs. So you can expect solo crypto asset ETFs in the US, not just Bitcoin and ETH, but a bunch of maybe mid-tail to long-tail assets, or even a basket of crypto coins coming together. It's definitely possible. And the US, of course, is the biggest ETF market. Things will become very spicy.
Right. So how are regulations playing into this? What is you mentioned something about Biden looking at regulations in this space and doing
Yeah.
something.
Things have been kind of interesting. Last 2 months have been, again, we are focusing on the US market here quite deeply, because the US is the biggest market, and the regulation is sometimes adopted by the rest of the world. So it's kind of important to take the US seriously. So the biggest regulatory weirdness that's happening in the US is about this ability for banks to custody crypto. So currently in the US right now, big banks uh, are disincentivized from custodying their customers' crypto. So what they have done is, if you have, let's say, a customer of yours deposits, say $1 million worth of Bitcoin in your custody, you have to keep $1 million in cash to back it up as a bank. So it's like very capital inefficient. So offering custody business is like very difficult for them right now. It's economically completely unviable. So this regulation was imposed by the SEC, and there was a bill saying that this regulation is not legal, and they wanted to overturn it. But Biden vetoed this regulation, this overturning. So Biden put his foot down, saying that we want to be in a world where US banks cannot custody crypto for their customers, which is a kind of a stupid thing to do, because banks like it, crypto people like it, everybody likes it. Everybody wants banks to be able to custody crypto. So there's no real reason why it should not be allowed. I don't see who's benefits from this. Like, there's no follow the money here. Like, if I follow the money, I don't know where it will lead me. Do you have any speculation as to why a political establishment might want their banks to not custody crypto?
It's mostly about risk. So I don't think SEC is the regulator here. I think it's most probably the Fed, and the Fed is worried about contagion effects. If some person gets hacked, and they do have this deposit insurance. So what if they're forced to insure these nut jobs who have deposited uh,
But
crypto with the banks?
that might not be the
And
case, right? Crypto assets might be exempt from the deposit insurance. No, they could just make a claim like that.
it depends. So for example, so if you just deposit cash, right, that goes into the reserves calculation. If you deposit, quote unquote, deposit gold, because India ran a thing where you could actually deposit gold in to banks, that too adds to the reserve. Um, so what happens if you deposit crypto, right? So if you say it doesn't it doesn't add to the reserve, it is not cash. So custody, in the sense, it becomes like a safe deposit locker, like how you, so in that case, bank should be comfortable saying that, look, it's your risk, here's our best practices, this is what we do, with regards to custody, these are our security protocols. If you agree with it, you can keep it here, and you pay us a fee for it. and in case it gets stolen, it is now not our problem. And that's exactly what banks here do as well. So you might think that keeping your hard gold coins in bank lockers are very safe, but the thing is banks are not liable to it. They have some insurance that is specific to break-ins, but that's about it. So banks can treat crypto similarly, saying we are not liable to this. Here's the insurance policy that covers this, and these are our security practices. So I think the real thing is the probably the administration got involved because they had circulated the state of crypto. I think last year or a couple of years ago, and their thing was basically that the whole thing is a scam. So we should not allow it to kind of corrupt the dollar system that they have going. So they absolutely don't want that to have anything to do with the existing banking framework. So I think they are coming from that space. It's more of a philosophical space rather than something that is straightforward.
Yeah. So I mean, anyway, this got a lot of heat from the crypto commentary crowd, I guess. But I guess the real world is far bigger than crypto, and the U.S. president is immune to some of these, I guess, moves. Uh, of course, a lot of the crypto podcasters and crypto influencers want to speculate that the crypto community is big enough now to sway elections, and Biden will pay a price for these kind of moves. I refuse to believe that. I think crypto is not big enough as a lobby, if there is a lobby at all. But little do I know, right? Like, Trump actually has made political statements saying that he wants Bitcoin to be mined in the US, make in the US and all that, which is a fairly stupid thing to say, but that's not surprising given Trump. He has also said something about how crypto mining will help AI arms race or something, which is even more ridiculous. So Trump is doing Trump-like things, and Biden is doing Biden-like things, and the U.S. political climate is uh, like a circus that it continues to be, and the crypto angle has not changed any of its nature of being a circus.
Right. So I think the biggest I would say the question mark is, does crypto exist outside of the US dollar system? Can it exist, right? And the answer has always been no. So you know all the rules and regulations that US imposes on speculative assets, commodities, everything is getting reflected onto crypto. And given that there's no so for example, why is gold treated differently compared to Bitcoin, for example? um, it's just that gold is lindy. So gold was there 5,000 years ago and still exists. And it took a special place as the world transitioned to a fiat system. Gold still had that I would say sheen around it, so it gets special treatment. But technically speaking, it's just boomer coin, so to speak, right? And when it comes to asset allocation, eh, the the reason why you would buy gold is basically there is some amount of like it acts as a bit of a what you call tail hedge, so to speak. uh, Although now it is debatable, but you can say okay, 5% of your assets there just in case, just smooth out your returns. But unfortunately that's not the case with crypto. It is the ultimate risk asset. So I think somebody looked at the correlation between Nasdaq, QQQs, and this whole crypto complex, and it's extremely correlated. So whenever Nasdaq ramps, crypto ramps, of course the magnitude is different, and whenever Nasdaq crashes, crypto crashes. So it is not even worthwhile as a hedge. So it has boiled down to a purely speculative assets. And so you should look at it from, okay, where else are speculators going rather than where investors are going. So with sports betting being legalized in the US, I think more and more of the wind is going to get sucked out of crypto speculation and go into sports betting. It's the same dollar, right? So the guys who used to bet on meme coins can now bet on sports. So I don't know. I think um, the crypto universe tried to kind of project it as an investment worthy space, whereas it actually is, it became a very a gambling oriented space. And in the gambling space itself, there's now a lot of what do you call, incoming competition.
Yeah, no, that's
uh,
true. A lot of crypto coins would definitely qualify as a pure gambling vehicles, but there is this notion that uh, a bunch of serious people have said that you need to have some checks and balance over the US debt. It's not very clear how it's going to manifest itself. The US might not care ever, but there is a possibility that eventually there will be the US debasement that continues onwards and onwards. And you could launch a speculative attack on the US dollar using some asset, which is either gold or crypto or Bitcoin specifically. It's a long shot. I don't see it happening in the next few years, maybe even decades. But there is a possibility that if US keeps debasing the dollar over the next many years, and they don't seem like they have the political strength to not do it, uh, it even though it might not reflect in the value, it will act as a good deterrent, so to speak. So maybe net it might be a decent thing, because in the gambling analogy, you can't take your gambling coin and go with it to some other place. Purely gambling coins are completely kind of localized to what they're doing. Sports betting, for example, if you want to bet on LeBron James and you want to keep that coupon, which will be given as a part of the LeBron James gambling ticket or whatever, that is useless. It's useless if LeBron James dies, or if LeBron James decides to retire, or if you want to move to a different country or whatever it is, right? With Bitcoin's case, it has the notion that it is universal. It has the notion that it's been around for 15 years. It has been pretty stable, and it's never died in some sense, right? People have been calling for the death of Bitcoin for the last 15 years, and it somehow has survived uh, in its own weird way. So, yeah, it's not been able to escape the US system. I agree with that, because the rest of the world, the physical world works on a physical law-based physical system. So there is definitely going to be some ties there. We'll see. I mean, I'm still hopeful that, though for me, the ideal world would be that crypto or Bitcoin specifically will keep some amount of balance to make sure that the US government or the people in the governments don't go completely crazy and screw their people over. So it's a way for people to kind of, in a weird way, it's like kind of the Second Amendment version of money. So the Second Amendment guarantees the people in the US to hold guns to make sure the governments don't come and kill them or whatever, which is a crazy thought, but that's at least the idea. So here it's like the equivalent of financial protection in case you want to get protection from debasement or whatever it is. Of course, if the US government does decide to fuck you over, you will not be able to use Bitcoin to get away from it, right? It's not possible. So it's more of a philosophical defense, not rather than a real defense. Until then, speculators will speculate and values will go up and down. Yeah, I see where you're coming from. I agree with you for the most part, but I have this philosophical hope that it acts as a checks and balance against rampant spending or rampant inflation or whatever.
Yeah, I think you should be careful when you go down that route, because you'll sound more and more like a prepper.
Yes.
So I don't know. I don't think. Look, it's. I mean, is the world going to end? Maybe at some point, but timing is the key, right? So you can't really spend your waking hours, wondering whether it's going to end like this second. So so that's one thing. So let's move out of this philosophical stuff, and let's talk about money. So what's going on in the VC world? Like, you've been to a bunch of conferences. So what's going on?
Yeah, so I traveled a little bit over the May June time. I was in Berlin for the most part. Berlin is kind of the hub of crypto innovation in Europe, along with Paris. So Paris and Berlin are your main hubs in some sense. So Berlin has a bunch of startups, a bunch of protocols being incubated there, a bunch of accelerators, incubators, a bunch of people who are in the space, kind of generally hanging around, researchers, universities that work on this stuff. The German-speaking universe of research from Vienna, from Zurich, from all over the kind of German-speaking world congregate in Berlin for kind of the most important week. I would say the Berlin Blockchain Week. So I was there as a part of ETH Berlin. So ETH Berlin is kind of this hackathon where a bunch of people submit their projects. Just to compare it with other hackathons in the world, ETH India, which happened in December and will happen again in December in Bangalore, had a bunch of maybe 700-ish teams competing and writing hacks over a period of 48 hours and then being judged by some prominent judges. ETH Berlin was around 300 number of teams or number of hacks that happened. So that's the scale difference. ETH India is still probably bigger, but maybe the signal to noise ratio is a bit better in Berlin. I'm not sure about it. I've not been to ETH India before. I plan to go this year. So I will kind of have a better idea of how the ecosystems are evolving. Yeah, a bunch of good projects, a bunch of interesting stuff. This year's theme was all about the philosophical part, where they wanted, because the Tornado Cash case was hanging around in the air, they wanted to kind of promote privacy, promote secrecy, promote encryption, promote anonymity, all of these other things that crypto people or cryptography people are excited about. So there were a bunch of projects around that space. But again, as you can guess, it's very uninvestable. As an investor, these privacy protocols are typically fairly hard to make money out of, because their job is to kind of not really help you make money. Their job is not to do speculation. Their job is not to do like a value add or whatever in a true utility sense. Their job is to just encourage private communication or private voting or privacy preserving browsing or privacy preserving paying or whatever it is. So yeah, the ETH Berlin event itself was more philosophically focused, but around the event, there are a bunch of other side events, which is the case with most crypto conferences or crypto events, that the side events tend to dominate, and there are many side events catering to many different personalities or maybe ecosystems. So you had events focusing on Solana, you had events focusing on restaking, or events focusing on modularity, events focusing on chain abstraction, which is this funky concept which I can probably tell you a few sentences about. So I don't know whether you are aware of this. Back in the Web 2 world, there was this notion that startups either try to bundle things or try to unbundle things. So this unbundling and bundling has been going on for a long time in the VC ecosystem in Web 2. One of the themes was you take Craigslist. Craigslist has a bunch of categories, and then you unbundle them. And then after a while, it becomes inefficient because they're too fragmented. So you again bundle them. And the cycle continues, right? So in VC landscape in crypto, we have a similar pattern playing out, in my opinion. So because Bitcoin and Ethereum were quite successful, a bunch of other coins, or what are called layer 1 blockchains, were launched. There's Solana, there's Near, there is Avalanche, there's Algorand, there is Polygon, there is Polkadot, there is Cosmos, Cardano. There's just so many of them. And eventually people had to like manage assets across these chains. It became complicated. And then eventually somebody said, no, let's do chain abstraction. We have this one notion of a wallet and of your assets, and they are across all chains or whatever it is. So this chain abstraction was a big theme in the event, which makes sense because VCs funded all the unbundling. Now they're funding the bundling. Eventually the chain abstraction will break down into chain abstraction V1, V2, V3, or L1, L2, L3, or whatever it is. So that was a bit of a interesting theme to notice. Crypto AI is still pretty big. I thought crypto AI had this moment like maybe earlier part of this year and had died down. It's there in the general air a little bit more even now. Essentially, the idea being that AI agents are a big deal. Like people don't want to like build their own agents for doing whatever tasks, and these agents will kind of emerge and there'll be a marketplace and stuff. I saw a bunch of companies doing that, which is interesting. There were a bunch of companies trying to do data anonymization, which I think is a weird problem to solve. But people do believe that AI models will eventually suck up your personal data. This fear that AI will know everything and you have to monetize your data somehow, because why would you want to give away data for free or something? I don't again subscribe to this, so I find this space a bit complicated. But again, keeping my own personal philosophical hat on versus keeping my investor hat on is a bit of a challenge. So you need to like balance the two. Yeah, we saw some interesting. I saw a bunch of interesting ideas, companies hanging around in the space. It was fascinating. So one more example of bundling and unbundling. So it was a theme, right? So back in the day, you would be able to have lending pools on Ethereum where you would take one asset and make it a collateral, and you can borrow some other asset with it. But then that became too difficult because this asset could be volatile or whatever. So they said, let's make a pool of multiple collateral assets and we borrow one asset against it. So you could deposit either ETH or some WBTC or something else and borrow USD against it. So there was a pool of assets which became like the collateral pool. The bundling happened. This was like in 2020-ish. And now they believe that the bundling is too risky because you don't know what the risk parameters are. So you want to unbundle again. So now there's a new protocol called Morpho, which unbundles the whole lending market in some sense. So there was local pools. Again, Aave kind of bundled them, and now Morpho is unbundling them. So this whole unbundling and bundling is happening in this space as well. So it's a theme, and we ride the theme. We ride the waves. So that's what VCs do.
Interesting. So in terms of actual dollars being spent on this, like where do you peg that? Like compared to you have your traditional web 2.0 products versus this.
Yeah, so that's a difficult question to answer because a lot of money is kind of I would call it rehypothecation is the wrong word, but let's say some version of it, right? A lot of money kind of circulates in the economy and giving you an impression of higher value than what actually is. But sometimes it's the opposite, where the number of transactions happening is much more than the number of dollars that are locked up. Like one example of that would be in Bitcoin land, there is this notion of what is called a lightning network. The lightning network is basically a way to do peer-to-peer payments without it hitting the Bitcoin blockchain. The problem is to do that, you do off-chain communication where you exchange some value and you are paying for a coffee or paying for a beer or paying for a deal or whatever. But that value is never shown on chain. So the amount of Bitcoin backing this entire set of transactions over time might be just one Bitcoin, but you would have done 25 Bitcoin worth of transactions on it. So the actual amount of economic value is much higher than what is shown in the blockchain itself. And unlike traditional accounting, if you want to count a GDP of a country or something like that, every transaction will account kind of to the value of the country or the economy. Here, every transaction is not on chain, so you will not be able to see it. And there will be private transactions which are kind of off the books, right? So, and this is like one example where the amount of money locked in the system doesn't tell you the actual value of the system. On the other side, there's the flip side, which is the amount of money sometimes locked in the system is actually a bunch of rehypothecated money. So it's actually lower than what it looks like. So there are both aspects in crypto where the amount of money in the system is hard to say, is hard to really quantify how much real value is locked. But again, I would say Bitcoin's market cap is your kind of bellwether amount in terms of figuring out what's the overall space size. If that contracts, then money is contracting and flowing to treasuries or wherever. If that expands, then money is coming from safer assets into more risky assets. In terms of VC itself, the notable thing was one of the big VC funds called Paradigm. Paradigm has been around for a long time. They closed almost $1 billion in a new fund a couple of days ago. I think 890 million or something, which is an insane amount of money to be having under control to invest in crypto companies. Not insane, but it's pretty high, I would say. So expect a bunch of infra projects, a bunch of blockchains, like what are they called? Layer 1 blockchains, the unbundling will happen. And yeah, this is kind of what I'm seeing. Asian VCs are active, European VCs are active, American VCs are very active. Indian VCs are active as well. So I saw some investments from India as well. Indian products catering to Indians. For example, there was an exchange that was doing INR denominated assets, but assets are all crypto assets. But everything is denominated in INR. The settlement happens in INR. So the exchange itself doesn't touch crypto at all. There's no actual crypto being handled by the exchange, no custody, nothing. So it's all proper KYC based exchange, accepting Indian rupees, giving back Indian rupees. But the vehicle they are working with is Bitcoin futures or whatever it is. Some options trading on crypto, but being settled in INR. So they were fully legit. They have compliance with SEBI or whoever is the regulator in charge. So they were looking to raise some money. So we kind of looked into that deal a little bit. It was interesting to see how traditional kind of KYC based exchanges operate in crypto, especially in a country like India, which ironically enough has the second largest options market outside of the US, or maybe even close to the US. We discussed this, right, when you were here. But you had some interesting things to say about it. What is your take on that?
So look, we banned, notionally or indirectly banned crypto, thinking that, oh no, it is, it is just speculation. There's no economic value add. Whereas our options market, keeps innovating. So we have our exchanges making sure that every day is an expiry day. So they have these weekly options listed on a bunch of things, and there are like people legitimately hooked on to um, like expiry day trading. And if you thought like gambling is addictive because of of certain things, like this is like gambling on turbo, right? So most of the money is being captured by HFT firms, and but retail is just hooked on to the fact that it is possible to make a fortune, trading these things, because you buy something for like 50 paisa and it expires at 500 bucks. Then if you put enough money onto it, you can retire, right? So this is basically that meme coin speculation being done on in the options market. And initially it sort of took off around the COVID lockdown time, and now it has become sort of like a like, let's just put something and pull the lever and let's see what the slot machine does, sort of a thing. And it has not gone unnoticed. So I think during this budget, people are expecting the hammer to come down on that as well. So maybe in terms of tweak to the STT, or that's the transaction tax. uh,
They're
so
going to disincentivize gambling using this derivatives exchange tax or whatever, transaction tax.
yeah, so the idea is that there is no economic value add except for gambling. At least if you look at the options, certain strikes, I mean, why do you want to trade them other than for pure gambling, right? So I think, they might have a sort of a delta based tax on those things. So I'm not sure how sophisticated this thing is going to be. So everybody in the options world is kind of looking at it and thinking, how hard the hammer is going to fall, and how
Yeah.
they're
So
going
if
to
the
get
traditional
affected by.
equity options market is going to get hit, then I'm sure the crypto options market is going to get hit as well. Uh, so we'll see how that goes.
Yeah, so I don't know if you're aware. So equity options in India are mandatorily, um, you know physically settled. So for example, if you own the options and they're in the money, and you hold them to expiry, then you better have enough money to actually buy the stock
And give
or
it to the
sell
holder
the.
of the, yeah, sure, sure.
So what that happens is, like a week before expiry, all like there's a massive spike in trading activity for people desperate to get out. And there are people who got stuck because they didn't have the money to buy the full lot size,
They got
and they
squeezed.
had to pay penalties, yeah, penalties and so on. Primarily because there was no other side to their trade, so they couldn't get out,
Hmm.
right? Um, so basically,
So can
options
you not
volume.
do this in kind, based on some exchange rate or whatever?
So, for example, index options are cash settled.
Yeah,
Okay,
exactly.
so
Can you do it cash settled is
yeah,
what I was wondering.
but SEBI wanted to cut down on speculation, so they made single stock options mandatorily
Physically
physically
settled.
settled. Yeah. So if so, in on one side, the volatility at expiry for certain stocks, for certain thinly traded stocks, went down a lot. And their concern was legitimate, in the sense the option market was completely disjointed by the from the cash market during these expiry days. So they want to protect the actual owners of the equities from the tail wagging the dog so to speak. Um, but the corresponding effect was that single stock options volume just dropped,
Of
right?
course.
Now nobody wants to even touch it, and the reason being, you're not sure that a week before expiry you'll be able to get out of this.
Exactly,
So
because
and
the tail is wagging the dog, and that's not a good thing.
Yeah, so something similar might be tried in in the index options as well, and I think that is part of the reason why index options took off, because uh, at expiry it doesn't matter what the P ratio is, or what the next income statement is going to be. Nothing, right? It's just pure technical, how fast can you type, kind of a thing. So when you squeeze the risk out of some place, it'll blow
Manifest
up
in
like
some
a
other
balloon
place.
in some other.
Yeah, 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 yeah.
Yeah.
Yeah, we'll see.
So speculators are going to be speculating.
Yeah, exactly. So we saw some speculative exchange products from India in crypto as well. So I thought that was kind of interesting because I thought crypto was dead in India, but apparently it's not fully dead. There are some people offering crypto investment vehicles as well. So we saw that as well. So yeah, Indian markets are still hot. Indian entrepreneurs, we saw a bunch of people developing interesting tools around crypto, but for the world as well. So people who are developing protocols which are not going to touch crypto inside India, but they will eventually have some sort of algorithmic component to it. There are people who are Indian entrepreneurs who are relocating to Dubai or some other place to avoid being in India in person. That's happening as well. So we see a bit of that as well. Like Indian entrepreneurs, and I take a call with them and I start talking to them, and they are actually based out of Dubai. They're not in Bangalore or Bombay or whatever. So that's happening. So yeah, the startup space in crypto is still pretty good. The cycles are kind of in the middle of the cycle in some sense. It's not fully bearish. It's not fully bullish. So good time for us to be looking at interesting products and startups and protocols and ideas. So yeah, that's where it is.
That's awesome. So I think with this, we'll wrap up this month's Cryptonite. So thanks, Tejasvi. Any parting thoughts?
No, we just watch and wait and watch how the US election will kind of go on, but that's like a faraway event, like maybe 4 months. Till then, that's it. Mostly, Bitcoin will do what Bitcoin does, and all the internal drama of Bitcoin and crypto is going on. Follow me on Twitter. I will post once in a while about some interesting stuff. That's about it.
All right. Thank you very much, Tejasvi, and thanks for tuning in.